Let's take a look at what's going on with Dogecoin today. All right, so I'm wondering if we're looking at some sort of pennant pattern right here. Let's go ahead and see what's going on. All right, so in my last couple videos, we've been watching this. If we zoom out a little bit, we're on the 4-hour time frame right now, but we could switch over to the daily. We've been looking at this falling wedge pattern, one of my favorite patterns. We broke it going to the upside. In my last couple videos, I've been saying the first target is right here, sitting at .139. We came up, hit that target, and looks like we're kind of chilling right there. The second target of this falling wedge pattern would be the next previous resistance and the next one. The next one is sitting at around .173, the 38% level, the Fibonacci retracement level that I've been chart that I've been looking at, and then the top is somewhere either the bodies are sitting at around .22 or the top is around .228. So we came up, we hit the first target, and these falling wedge patterns, once we break this resistance line going to the upside, then we can start looking at the previous resistances. Like I said, we have the first one, the second one, and the third one. Came up, hit that first one, and I'm wondering if we're going to be heading up to the next one. So yeah, that's like in the bigger picture. But when we zoom in, let's go back to the 4-hour time frame. We're on the daily just now. We've been kind of in this little sideways action for the last couple days. We'd also been in the last couple days been watching this uptrend right here. So in an uptrend, we look at the bottoms like I've been talking about. We look at the bottom, the supports. So we draw a trend line from this support to this support, something like that. And as long as we were on that uptrend, then we're going to continue to go up. Once we break it, then it could be a sign that we're going to go down. But the other thing that I like to do after we break trends like that is set up the top, or look at the top and then look at the bottom, something like that. So technically we are still within the top and the bottom. We're still kind of trading sideways here. The other thing that, okay, so we haven't broken, okay, so if we break to the upside, then we can get more confident on the next target. And if we break to the downside, then we can start looking at the next Fibonacci retracement level, and that one's sitting at around .115, the 78% level. Just to recap again, about the Fibonacci retracement levels, when we go up and we start thinking that we're heading down, then we could get the Fibonacci retracement tool right here, drag it from the bottom to the top of the trend. That gives us levels to watch. I like watching the levels because we bounce in between them. Sometimes we'll get support on them, like we found support right here, got to bounce to the upside. Support right there, got to bounce to the upside. Sometimes we'll get resistance on them. We went to the 38% level, got resistance, boom, started heading down. After that, we found support on the bottom at the what is it? It was just the bottom of the chart, which would be like 0% or whatever. We came down, found support on that, and ever since then we've been bouncing to the upside. But there's other instances where we could trade on them. Anyways, like I've been talking about, or when I was talking about over here, if we could break this Fibonacci retracement level going to the upside, the next one that I was looking at is this one right here. So we came up, hit that target as well, hit that Fibonacci retracement level. We've been kind of trading right around that area. So yeah, I think if we could break above this Fibonacci retracement level decisively, then we could be looking at the next one or the next one. Like I said, I'm really looking at this 38% level right here because this is that previous resistance over here on that falling wedge. Okay, so back to the pennant pattern that I'm kind of looking at right now. Let's go ahead and delete the bottom and the top, like just like the bottom and the top of that, because I was also looking at this resistance right here, this resistance, and this resistance giving me this downtrend. Yesterday we did break above it, but it looks like we're kind of going back into it. We still have support giving me this trend line right here, and it kind of looks like we're in a little falling wedge pattern or maybe a pennant pattern. So a pennant pattern is basically, or a bull flag, a flag pattern should I say. There's bull flags and there's bear flags. But a flag pattern and a pennant pattern are continuation patterns. So we have a big run up, and then once we start cooling off and going sideways, it's consolidation, kind of going sideways for a while. Sometimes it's like a perfect like top and bottom, like I was talking about, where we get a thing and then we just bounce in between this. And if we're going up, then like I was saying, it's a continuation pattern. Not most likely, but you know, it tends to weigh on the side of continuing the pattern when we're doing that. So if we break to that, or okay, sorry, let's go back to the flag pattern and the pennant pattern. Okay, so it's going sideways, and if it breaks that going to the upside, then we can drag from the top to the bottom of the pole, which is, I don't know, you could argue that it's right here, or you could argue that it's down here. So let's go ahead and set up that something like this. Like, let's say it was perfectly doing sideways action, hitting the top every time and hitting the bottom every time, like going boom, 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 boom. Sorry, I just messed up the line, but it's, you know, going sideways. If we break that top line going to the upside, then we can drag from the bottom of the pole to the top of the pole, drag that to the breakout, and that gives us a target. Same thing with the pennant pattern though. Let's go ahead and delete this for right now. So we have this big run up, and then it kind of gets a little tighter and tighter and tighter. It's almost like a falling wedge after a big run up. So what we could do in that instance is the same thing. Like I said, we did break above it yesterday, and we didn't, and we got resistance and started heading down. So what I would do in that instance is readjust the trend line, because we're now looking at something more like this as opposed to the other one. So if we could break out of this going to the upside, there's declining volume ever since we started breaking to the upside. The other thing that we do in patterns is we look for volume. So if we broke that going to the upside, we started getting some volume, then we could get confident on targeting it as a pennant pattern or a flag pattern. So what we would do then is, like I was saying, we would drag from the bottom of the pole to the top of the pole, something like that, I think, because that's like kind of the top right here. That's where that pole kind of goes like this. And then we would drag this to the breakout. Let's go ahead and just drag it up here. We haven't broke out quite yet, but let's like put it at that Fibonacci retracement level. And that kind of takes us all the way up to that 38% level. It's technically sitting at around 171, but that's very close to that previous resistance. It takes us close to the 38% level. And yeah, so I think what I would be looking at is, like yesterday's video, we're watching the resistance right now because we are technically kind of trending down. We have resistance, resistance, resistance. Once we break this, going to the upside with like decisively, and then we'll also be looking at the volume. If we start getting big volume candles and, you know, a change in pattern. Okay, so let me move some of this stuff out of the way. So we're looking at the declining volume, right? That's another way that you can kind of look at the patterns, is if the volume is declining, that's kind of where the pattern starts, maybe something like right here. And then declining volume, once we get the pops in the volume, then we can get more bullish or more confident on targets, or that the pattern's actually performing. So we have this little this little sideways channel that's kind of falling to the downside. If we break that going to the upside with some volume, then I think we could be heading back, or we could be heading back up to that 38% level, sitting at approximately, what was it? 173. That's kind of my next target if we're getting bullish. If we're getting bearish, I mean, well, the signs aren't really pointing to being bearish. Like, there's not a lot of signs pointing to being bearish. But if we do get rejected somewhere here in that Fibonacci retracement level, like I was talking about, those levels, those lines, if we start going to the downside, let's say we break this line going down right here, then the next spot that I'd be looking at is the Fibonacci retracement level going to the downside, sitting at around 115. But like I said, this looks pretty good. We had this nice little pump. Now we're getting consolidation. If we could break this going up, then we could get more confident on it going up. Right now, we're basically waiting for a breakout. When we have these little patterns like this, and we're just kind of bouncing sideways, we want to wait until we break to the upside or to the downside to really get confident that we're going up or down. But this pattern does look pretty good. Let's go ahead and take a look at the moving averages real quick. On the daily time frame, it does look like we're testing that 9 moving average. Let's go ahead and delete the pattern real quick, because we could always redraw that. And I'm on tradingview.com right now. If you guys are new to trading, go to tradingview.com, create an account. It's free. Then you can look at the charts and you have all these free tools to look at charts and create a watch list. You can search for stocks and crypto, whatever you want. These are all my watch lists right here. Okay, so back to the 9 moving average in Dogecoin though. We've been looking at this 9 moving average on my channel right here, and I've been talking about how if we break above it, then we're getting okay. So when we break above it, then we're getting support. It's more likely that we'll get support on it. Look at it. Every time we came into contact right here, support, pushing us to the upside. When we break below it, like right here, then when we come into contact, we get resistance. And we're going to the downside until we break up. Then we start hitting up, break to the downside. That didn't really last that long, but we broke back above it and started getting support on it and pushing to the upside. So I think so basically it's a good sign when we're above the 9 moving average right here. It's a good sign when we're above it, and it's kind of a bad sign when we break below it. We were getting support on it. We had a nice little run. We're testing it right now. It still looks like we are testing it. We haven't really decisively broken through it. I think if we break through it, then we might be looking at targets going to the downside. There's the 180 moving average as well that I've been watching. We came up to it, got resistance, started heading down. Came up to it, got resistance, started heading down. We actually tested it right here and broke through it, and that's when we got those nice green candles. So yeah, I mean, we could be coming down to this level. We could be coming down to the Fibonacci retracement level if it breaks that 9 moving average. We haven't done that yet though. So technically we are still above it. I wanted to look at the bigger time frames though and kind of check those out. The weekly, we are far above the weekly right here. We broke above it right here, and ever since then we've been getting support on it, bouncing to the upside, having good movement. Let's take a look at the monthly, because the monthly, we'd been below it for a couple of months. We broke below it right here, came up, tested it right here, got rejected, started heading down, or not heading down, but we were down here. Right now we are above the monthly time frame, moving at 9 moving average, which is a good sign, like I was just talking about. It's possible. Okay, so we have 6 days and 12 hours. What I want to see us do is close this candle that we're looking at right now above the 9 moving average. If we close that candle above it, I think that's going to be a good sign, like I was just talking about. Once we break above it, then it's better chances that we're going to be heading up. Sometimes we have to come back and retest it though, like right here. We broke above it. We had to come back, retest right there, boom, tested it, got support on it, and then bounced to the upside greatly. So let's see in 6 days, 12 hours, if we can close this candle above this 9 moving average right there. If we do, I think that's also going to be a good sign for Dogecoin. And then, like I said, we might have to come back down and retest it. Like maybe we'll go up to the 38%. Have to come back down and retest it and then do something like that, or it's hard to tell what's exactly going to happen. If I knew, I'd be rich and I would be, you know what I mean, whatever. But so yeah, I think it's a good sign though. Like the 9 moving average on the monthly time frame, we are above that. So I've been kind of waiting for that to happen as well. So let's see if we can stay above that. 6 days, 12 hours. Let's see if we can stay above it. I think those are some of the main things that I'm looking at. We could look at Dogecoin and Bitcoin. That is on the daily time frame though. It really is testing that 9 moving average, and we might even be slipping below it right now. If we break that, going below it, which is sitting right around that .139 level. I mean, the 9 moving average is sitting right around .139. So if we start breaking this like decisively, then like I said, we might be coming back to the 180. We might be coming back to that Fibonacci retracement. What I was going to say is maybe we should take a look at what Dogecoin compared to Bitcoin is looking at again. Okay, so let's go to the 4-hour time frame on this one. Yeah, hold on one second. Okay, so let's go ahead and zoom out a little bit, because I've been looking at, let's go to the daily time frame actually. Let's zoom in. Okay, so this is what I've been looking at before anyways. We had resistance, we had support, giving me a top trend line and a bottom trend line. Before we broke out of this, I was saying if we can break this right here, that's going to be a good sign for Dogecoin. Basically, if this chart is going down, you want to be in Bitcoin. If this chart is going up, then you want to be in Dogecoin. So kind of like, dollar to Dogecoin or whatever. But Let's see. Okay, so we had an uptrend right here. We were looking at the uptrend. On the uptrends, we look at the bottoms. Bottom, bottom, support, support, moving us to the upside. We even had support right here. But we broke this uptrend going sideways right here. And like I've been talking about, when we break the trends, we look at, or I look at the top of where we're at, or like the top of this little run, and then we look at the bottom where it's getting support right here. We haven't broken to the bottom right now. It still looks like we're going sideways. If we break this going down, that's going to be better for Bitcoin, and it's going to be less good for Dogecoin. If we break this top right here, if we get a bounce right, if we get a bounce on this support, we have the support right here. If we could come down, get a bounce up here, break through this resistance, this top right here, then I think that's going to be good for Dogecoin, and then we can start heading it back up, or we can start moving up and outperforming Bitcoin. Basically, this chart is showing which one's performing better. Is it Bitcoin or is it Dogecoin that's performing better? Right now, it does look like Dogecoin is in a little uptrend compared to Bitcoin, so let's see if it can continue to like perform better. But like I said, if we start going down, then it either could mean that Dogecoin will go down or Bitcoin's going to start going up. Either one. So yeah, those are some of the things that I'm looking at. Let's go ahead and close that. So yeah, basically we're watching a little pattern right here right now on the 4-hour time frame. We have the bottom, we have the top right there, something like that. This could be a pennant pattern. Go ahead and look it up on Google, pennant pattern, or both flag patterns. They are good to know about. Like I said, it's a continuation pattern. We have a nice run up, then we have consolidation. Then once we break going to the upside, it's a continuation. I think the favorite tips in like breaking to the upside on this pattern, because we're going up. You could also have bear flags and bear pennants. So what that looks like is we have, let's say we have some price movement, and then we go down, and then we start getting consolidation, and then we set up the, you know what I mean, the bottom and the top, something like that, and then that, it's a continuation pattern, so it's more likely to break to the downside, and that's that continuation. On a bull flag, it's we have some movement, we break to the upside, we get a nice movement to the upside, we get consolidation, we look at the bottom and the top of that thing, and then we break. It's more likely to break to the upside. It's not guaranteed though. So yeah, I mean, you can see right here, pull, flag, kind of looks like a flag pattern, and then we also have, and then like I was talking about, there's a pennant pattern. So we do this, and then it just gets tighter and tighter and tighter, and then it kind of looks like a pennant, something like that. That's kind of what this is looking like, more than a flag pattern, because a flag pattern's more like a straight channel. This one looks like more of like a falling wedge, after a big run up. So yeah, hopefully that helps explain stuff, or even kind of just get you introduced to like some of these patterns. Bull flag or flag patterns, pennant patterns. Check them out on Google. I think investopedia.com or something like that. It'll explain more, and it'll, yeah, that's what I used to do when I was watching videos from other channels, is, go do a little bit of research on it as well. I'll mention patterns and stuff like that. Go ahead and Google them and make sure that I'm, keep me honest. But yeah, so those are some of the things that I'm looking at. I'm very curious if we're going to stay above that 9 moving average right here. Like I said, it's not guaranteed. These patterns are never guaranteed how they're going to perform, if they're going to 100% perform, or if they're even going to work out in general. Sometimes it's a fake out and it'll break to the downside. But these are some of the clues that it's going to give us if it is breaking to the upside or the downside. We have resistance. We have support. If it breaks to the upside, we can get confident on going to the upside. If it breaks to the downside, then we can get more confident on coming back down to some of these levels. And these Fibonacci retracement levels just give us places that we can kind of, look at to see that it might, like, shoot for, should I say, because if you don't have any of it, like, let's go to another chart where there's like nothing on there. If we don't have anything on there, let's go ahead and just delete everything. We don't need any of this. Okay, so if we're just looking at the basic chart, it kind of like, there's nothing to really tell us. I mean, we could be going anywhere. Like, this is just really a blank chart, and we don't even know what's going to happen. I mean, you can't really tell. But once we start adding technical analysis into it, some stuff like this, then we have spots that we can kind of look at. Like we also have this uptrend right here where we had support, pushing us to the upside. That's another place that if we did break to the downside, we could be, and that lines up right with that Fibonacci retracement level. If it went down like kind of hard, then it could be there. If it went down a little softer, like it went down somewhere right here, that would probably put us more like at that, let's go to the daily time frame. That would put us more like around that 180 moving average. Sorry. Like let's say we did something like this where we started just kind of going sideways down, and then this 180 moving average kind of came and caught up with us. Then we found support right there and then bounced to the upside. These are all different things that we can kind of look at for clues on what we might be doing. Patterns, trend lines, Fibonacci retracement tools, Fibonacci retracement levels, moving averages. They're all clues to tell us what might happen. So yeah, looking at a possible pennant pattern, let's see if this performs. I'm still looking at that big falling wedge pattern. We came up, we hit, sorry, it's more like this, boom, 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 boom. We broke the top, or we broke that resistance. We came up, hit that first support, the first resistance. Now we're looking at the next one at the 38% level, or lines up perfectly with that level, around 173. And then if we can break above this, then maybe we can start getting more confident on hitting the top and or breaking out of this Fibonacci retracement box. If we break out of this, then we can start looking at like the other previous resistances, which we'd have to zoom out and kind of see where else there was resistance. So let's see, we have some resistance right here. We have a little bit of resistance right here. The top right here is sitting at around 0.35. So that would be the next like area that I'd be shooting for if we could break out of this Fibonacci retracement box that we've been kind of sitting in like basically all this year. Or we kind of shot up to this level this year, then we started heading down. We're now breaking out of this. If we could, so first things first, this was the first target, we hit it. The second target right here at the 38% level at 173, we still have to hit that. The next target would be the top, sitting at around 0.22. If we could break that, then we can start getting more confident on that other one. What was it, like at 0.35 or 3.2 or something like that? 0.3. It's basically around 0.35, but it could be anywhere in this area. So we still have to like cross some bridges before we get there. And the first bridge right now on the 4-hour time frame is this little falling wedge, falling channel pattern. If we break that going to the top side, then we can start getting more confident on those other targets. If we break this going to the downside, then we're going to have to start looking at the 180. We're going to have to look at places for possible support, which could be the 180 moving average, could be the Fibonacci retracement level, or it could be this uptrend that we were looking at before. So yeah, those are some of the things that I'm looking at on Dogecoin today. Let me know your guys' thoughts and what you guys are thinking down below in the comments. If you guys like this video, hit the thumbs up. If you want to watch the last video, check it out right here. If you're new to trading and want to get started, check out this playlist right here, help you get started. And if you guys like the video, hit the thumbs up, and I'll see you guys in the next one.